the yen has been absolutely flying for the last several weeks, and but it does look like it may be reaching an extreme and could be getting to a point where it may be topping. Looking at JPY yen pairs on the charts, we use yen as the counter currency rather than the base currency. So in these, when we look at these charts, the chart going down is the yen going up relative to whichever currency it's being traded against. So we'll start here with the US dollar yen, and this is quite an intriguing trend action here. We have the yen bounced off the 100 round number today, and but for over most of this year it's been in a steady downtrend. The yen has been appreciating. Why? The yen is seen as a defensive haven in times of turbulence, and through the course of this year and heading into the second half of 2016, lots of turbulence out there in the market has kept a lot of interest running high in the yen. What's interesting here, we had this big spike downward on the day of the Brexit results, and it knocked it into the 98.80 to 100 range. Now we did get a bit of a trading rebound. Now we're back probing this area again. So far, this support zone is holding. So far, we're continuing to see a positive divergence in the RSI. We have an RSI that's close to oversold, so there are some signs that this could be close to a bottom. The question is, do we do a double bottom here around 100, or could we get a little bit more weakness, do a double bottom here around 98? As we can see, we're also down in this falling channel here, and we're testing the bottom of that as well. Previous retests of this have been followed by significant trading bounces. So what could we see on a trading bounce for this pair? Initial resistance here around 101.70, 102.70. Here is about 103, 103.40, and this first here 23% Fibonacci retracement 105.14, close to the 105 round number. Switching gears slightly now, we're going to look at the yen against the euro as well. And what's interesting about this one is that as we're seeing a similar pattern here, we're getting close to a double bottom, but not quite there yet. We are getting close to oversold, bit of a positive divergence. We've been in this long-term downtrend as shown about the channel. Now, in the case of the dollar, we saw it was bouncing off the bottom of this channel. In this case, we've already broken the channel. We've actually retested the old support line as new resistance and turned down again. So this is bearish. However, the question is, do we set a double bottom in here? If we do, then we could get a sign of base building, support in the 109.50 to 110 area. We can't rule out a retest of this zone yet, and if that was to break, we could see further declines. But at the same time, we ask ourselves the question: at what point does the Bank of Japan have to step in and intervene? The rapid and massive appreciation of the yen is completely undermining their QQE program. So we do run into the question: is it 110 on euro yen? Is it 100 on US dollar? Is it a point a little under that, where the Bank of Japan could be forced to step in to try and limit the upside? Because of this, we could still see, and the ebbs and flows of fear and greed in the markets right now, we could still see significant trading swings in the yen in the coming days.